Pepsi is an interesting stock to follow, not just for dividend stock investors, but for all stock market investors, because Pepsi is such a large company dealing with consumers around the world. Its results give insight into how the consumer is behaving, what kind of pressure the consumer is facing, how they're changing their spending patterns. And so that provides insights into what could be happening throughout the world economies as consumers are changing their spending patterns. Pepsi stock I upgraded to a buy after the price crashed around May, June, when it fell to around $130 per share. A few weeks after that crash, I upgraded the stock to a buy, and it's since recovered nicely up to $151 a share as of this recording. So in this video, I'll review the company's latest highlights, what they reported on regarding their business, and update my buy or sell recommendation on PepsiCo stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Pepsi reported to investors a few days ago in their quarterly investor update that in their beverages segment, the math is easier when you take out their water business. Beverages actually grew in volume in the quarter. Now, that's an important distinction for Pepsi stock investors because sometimes the company's revenue grows even though volume declines because of changes in how people purchase their products, because sometimes Pepsi will change package sizes, and so that will cause an increase in revenue despite a decrease in volume, or maybe Pepsi increases the price across the portfolio and that causes an increase in revenue because people are paying higher prices. But in the most recent quarter, what the management team is saying is that beverage volume actually grew in the quarter, which is a great indication for investors. That's one of the best ways you want to see the company grow its business is by people consuming more of its products. And the other factors, the increase in average selling price and other package size changes, it's good, but it's not as sustainable as an increase in revenue due to an increase in people consuming their products. That's a signal that people really like their products. They like the value that they're getting, and they're likely to come back to the brand for more of their product in future quarters and future years. Versus if the company's generating more revenue because they're raising prices, of course, consumers might go to the market with the intention of buying some PepsiCo products and they see the price increase and they buy it anyway, but they're not really happy that Pepsi just increased the price. And so that kind of increase in revenue is not as sustainable. You can't increase price as much as you can increase revenue because you're gaining market share, because your products are resonating with your customers. So in their foods segment, they changed their promotion strategy. Whereas in the same quarter last year, what they did was focus their investments, promotion, advertising to really promote one product. Instead, what they did this year is create more value across all their brands. So they spread out their investments across all their brands rather than focus on just one brand. And the management team saying that that impacted the volume and better revenue realization. So that worked out well this year compared to last year. And of course, if you're investing in PepsiCo stock, you should know that one of the company's competitive advantages, something that this company is really good at, is marketing. Marketing is one of the company's core competencies, one of the company's core skills that it's better than most any other provider of its segment, right? Other than maybe Coca-Cola, which you can argue is better than Pepsi-Cola and PepsiCo, the brand, overall the portfolio of products. PepsiCo generates strong competitive advantages because of its marketing capabilities, not just in how it markets, but also because of the size and scale. It has marketing efficiencies in economies and scale, being an international company with worldwide operations. And that's something that they've been able to hone over the years. So something Pepsi's been under pressure about is its business model, the execution. They had some service level issues earlier in the year as systems transitioned. Remember, they've been integrating their business units and trying to streamline operations because investors have not been happy with this business performance. If you look at Coca-Cola, They deliver better margins, and investors have been asking Pepsi, why are you vertically integrated if, Coca-Cola is not as vertically integrated as you are, and they're generating much better margins? Maybe in your industry, it would be better if you de-integrated and outsourced some of your logistics, operations, distribution, etc. And PepsiCo has been, they haven't really pushed back strong against those investor thoughts, but they haven't really made any major announcements in regard to that. But the good news is that service levels are improving. The company says that they're very high on both businesses right now. And by both businesses, they mean the beverages segment and the snacks segment. And they're seeing much better fill rates, and that's driving growth. And of course, if the company's better at servicing its distributors, then it can attract more shelf space and keep competitors out. If you're finding, if you're having difficulty servicing your channels, servicing your partners, they're going to look to other businesses for that shelf space. And that's actually been one of the advantages of Pepsi and Coca-Cola over the decades, is their reliability. These businesses are very hesitant to give shelf space to new up-and-coming companies because they don't trust their ability to consistently deliver and service these locations effectively. And so they've stuck with Pepsi and Coca-Cola and Keurig Dr. Pepper because of their duration in the business, the logistics capabilities, the information systems that allow them to replenish inventory effectively, and all of that which goes into servicing these locations, which is not an easy thing to do. It's one of the most difficult things to execute. And Pepsi and Coca-Cola have been very effective at this, and that's what's kept a lot of competitors away and had them have a more difficult time in gaining market share against Pepsi. By the way, this document I'm reading from is the company's most recently completed earnings call with Wall Street analyst. I made this highlighted document available for my channel members, and you can join for less than $5 a month. I think it's a great deal. And you get not just this one, but you get dozens and dozens of these kinds of highlighted conference call transcripts, and you get many more benefits as channel members. See the link in the description. You'll see all the benefits you get as a channel member. So I mentioned I upgraded PepsiCo stock to a buy when the price bottomed out around May, June. And the intrinsic value per share I calculate is $176. The current market price is $151. So even though the stock price has rebounded from the lows, I still think PepsiCo stock is undervalued. And I still think it's an attractive investment, especially for dividend stock investors looking for safer investments. This stock is not going to double your money in a year. It might, but the chances of that happening are not very high. But this is more of a steady increasing stock that's going to pay you dividends, as well as you can reasonably expect capital share price gains over the longer term. So for dividend stock investors, for passive income investors, PepsiCo stock, I think, is an attractive option at current market prices. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.